Good morning, everybody. Uneducated Economist here. We got 8 people watching with 5 likes. Be sure and hit that like button when you come into the live stream. By hitting that like button, the algorithm will pick up the video, spread it around for more people to join in. This is going to be a really important video to understand. The monetary policy coming from the Federal Reserve is not the one that everybody seems to think it is out there. There's a narrative that is pushed out there in the mainstream media that really has grasped everybody's attention and has really propagated this idea of what it is that the Federal Reserve is attempting to do with their interest rates, the Fed funds rate, with inflation, with the economy in general. And very, very rarely do you ever hear anybody ever talk about something called the neutral interest rate. Now, it is brought up and there is times that it is mentioned, but very rarely do you hear anybody talk about the Federal Reserve's monetary policy strategies when it comes in relationship to the neutral interest rate. Now, I'm going to go back to a speech that I bring up just about every single time I do a video, and that's monetary policy strategies for a low neutral interest rate world. The reason why I bring this speech up is because it was very telling. It was pre-pandemic and after the great financial crisis, with all the money printing and all the quantitative easings and balance sheet adjustments and everything that had taken place, the Federal Reserve had positioned themselves in a very precarious spot. They had fallen to zero on the Fed funds rate, and the neutral interest rate, which is the rate that's neither accommodating nor restricting the economy, had become very low. Now, John Williams describes it here in this speech. This is, again, monetary policy strategies for a low neutral interest rate world. This is dated November 30th, 2018. And this is what he had to say. As a starting point, it is useful to travel back in time to the 1980s and 1990s when inflation targeting was introduced. The problem at the time was a high and variable inflation contributed to macroeconomic instability and unmoored inflation expectations, which in turn fueled high and variable inflation. To break the vicious cycle, numerous central banks instituted inflation targeting, or variants thereof, with a focus on bringing inflation down to a low level and fostering the establishment of stable, well-anchored inflation expectations. So back in the early 80s when we had the inflation running rampant, they shot interest rates up to 15% on the Fed funds rates and even higher, I think, at some point. And this was the idea of battling inflation and how to deal with it, is that the Federal Reserve promised, hey, we will keep inflation at 2%. All right, we have a 2% target. If anything is outside of the 2%, we will adjust in interest rates in order to achieve a 2% target. And it worked. It worked really well. All right, and that's what he was saying. This strategy worked extraordinarily well in the decade preceding the global financial crisis. Central banks were able to achieve remarkably low and stable inflation, leading to a positive feedback loop between low inflation and well-anchored inflation expectations. So at the time, they were able to adjust their monetary policy and achieve what it is that they were trying to do, right? They didn't always work, but, hey, they were working fairly well to keep the low and stable prices in the low, and keep the economy somewhat moving. Right? So again, we can argue about it all day long, but essentially this is what they were trying to say. Today, we face an altogether different set of problems stemming from a very low neutral interest rate. That is, the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. Now, that is really what got me about this speech. In November of 2018, the Federal Reserve had just come off of massive quantitative easing, expansion of the balance sheet. Everybody was convinced of hyperinflation, and they were sitting in a position going, we have an inflation expectation that is persistently too low, that is screwing with our monetary policy. We need this to be higher, right? This is what they were saying. Now, at the time, I was like, how in the world are you going to get inflation? You just expand the balance sheet by almost $4 trillion, right? And failed to produce an inflationary scenario. It was a quadrupling of the balance sheet. He goes on to say this: today's low neutral interest rate reflects the culmination of trends extending back 25 years. See, going back 25 years, this issue with the neutral interest rate. A quarter century ago, a typical estimate of the neutral rate in the United States was 2 to 2.5%, consistent with historical averages over the preceding half century. Since then, however, there has been clear downward trend in the neutral interest rate in the United States and other advanced economies, with the current estimate ranging from 0 to 1.5%. Three main global trends appear to account for the bulk of the decline of the neutral interest rate over the past quarter century. One is demographics. Populations are aging, people are living longer, and birth rates have fallen. The second is productivity growth, which has slowed around the world. The third is the heightened demand for safe and liquid assets, which has led to a wider wedge between yields on safe government securities and central bank reserves and the yields on risky assets such as corporate bonds. Now, those three trends, think about that. Demographics, too many old people, not enough young people, all right? Too many old people. The second was a slowdown in global growth, right? There was so much expansion that had taken place, there was no more room to grow, right? Global growth had slowed down dramatically. And the third was the heightened demand for the safe and liquid assets. People had no fear of inflation, and so they were willing to buy the U.S. Treasuries and tie their money up for 10 years at an incredibly low yield because their fear of inflation was really low. The problem with this is that the gap between the safe and liquid assets and those corporate bonds was huge, right? Too wide of a wedge. Now, I find that to be very interesting that these are the three trends that was facing the Federal Reserve was facing with a low neutral interest rate. It was the main reason why the neutral interest rate had fallen so much. Importantly, the onset of these trends preceding the global financial crisis, as they have continued even as countries have recovered. Although there is a great deal of uncertainty about the neutral rate, the end conditions may change. A reasonable assumption is that it will remain low, not far from current levels, for the foreseeable future. Now, that was prior to the pandemic. Right? So after the pandemic, obviously, I didn't track any of the numbers. Like, I didn't watch any of the news. I didn't see how many deaths there were. I didn't see any hospitalizations or infections. I didn't watch any of that stuff, right? But I heard a bunch of old people had passed away. So out of the three global trends that was causing the neutral interest rate to rise, one of them, right, the very first one, I'm not saying it was taken care of. I'm just saying that was, part of the issue. Right? The next one was global growth. Well, how much slowdown in manufacturing and distribution and bankruptcies and all that other stuff has taken place? Right? Because of the expansion that had taken place, there was no more room to grow. Well, if you hack out the legs from all the zombie corporations and all the places that shouldn't be there, right, you have a burning out of the undergrowth. It's actually a Austrian economics theory. Right? Let the bad debt fall away and give room for new growth to take place. Right? Just saying. That's one of the problems, right? And then the final one was those interest rates. Right? The safe and liquid assets like U.S. Treasuries were too low. Right? It's hard to believe that, but it was creating a problem, that wider wedge between the safe and liquid assets and the corporate bonds. So this was a major issue for the low neutral interest rate and how it was interfering with the Federal Reserve's ability to stimulate the economy, because in order to stimulate the economy, they would have to drop the Fed funds rate far enough below neutral in order to be actually stimulative. So now we fast forward to today. We had all the inflation and all the scares and all the other stuff that had happened. Right? And the neutral interest rate had begun to rise on the inflation expectation. So as people believe that there's going to be more inflation in the future, or even if we have a hyperinflation scenario or whatever that comes, right, the whole narrative, the neutral interest rate begins to rise. Now, if you think about the neutral interest rate rising on account of the inflation expectations that are out there, remember the neutral interest rate is the rate that's neither accommodating nor restricting the economy. If that's beginning to rise, well, then it's encroaching in on the Fed funds rate, which is standing still now. Right? This makes the economy less restrictive as it starts to move up. Now, that is if it's moving up, because there's no way of really viewing what the neutral interest rate is today. It can only be viewed in the past. So you can go back and look and say, okay, the neutral interest rate was this, but at current level, we don't know, because it can only be observed after, right? It can only be observed from the past, or looking at the past. However, the Federal Reserve has something called R star, right, which is their best guess of what the neutral interest rate is. But still, it has to happen, and you have to observe it from the past to know where the neutral interest rate was or is in accordance to where the Fed funds rate is. It's very interesting to try and wrap your head around that, but I wanted to bring that up because of this small little section out of Christopher Waller's recent speech about how it's time to cut rates. In fact, I believe that's the title of his speech, Time to Cut, right? Let me see, actually, hold on. It was yesterday. He just gave the speech yesterday. Let me cruise up here to the top real quick and look at the title of the speech. It is called The Time Has Come. That's the title of the speech, The Time Has Come, given September 6th, 2024, Christopher Waller. Now, in this speech, he gives all the reasons, like all the economic reasons, unemployment, the inflation rates, and all the other stuff. He talks about all that stuff, right? But then he comes down and he says this thing, right? Which I thought was this incredibly telling. Because, again, we have to think about what the monetary policy of the Federal Reserve really is, right? And like a lot of people want to say it's political, it's for elections, it's for ripping off the middle class. Okay, I can agree with all that stuff, right? I mean, it's obvious that it happens, but then we have to understand the underlying forces here that are actually taking place within the Federal Reserve and what they are looking at and communicating. Because again, these speeches are not necessarily, like, think about I don't know, maybe I didn't go and read enough of them, but I don't remember Christopher Waller mentioning anything within the mainstream media articles that I saw talking about this particular topic right here, the neutral interest rate. Okay. Now, this is what he says in this speech. Determining the appropriate pace at which to reduce policy restrictiveness will be challenging. Okay. Easy enough. Choosing a slower pace of rate cuts gives time to gradually assess whether the neutral rate has in fact risen. Right? They don't know. He even admits it right there. It gives us time to look and see if it has risen. But at the risk of moving too slowly in putting the labor market at risk. So if they move too slow, people might lose their jobs, and that's going to be bad. All right. And it's also part of their mandate is to keep full employment. Putting market at risk. Okay, cutting the policy rate at a faster pace means greater likelihood of achieving a softer landing, but at the risk of overshooting on rate cuts if the neutral rate has in fact risen above its pre-pandemic level. This would cause an undesired loosening of monetary policy. You see, they don't know exactly where that neutral interest rate is, just like nobody else knows exactly where it is. And if it is rising on inflation expectation and they lower the Fed funds rate, there's a good possibility that they could actually move beyond the neutral interest rate, becoming stimulative. Right? Because right now, they want to reduce the restrictiveness. But if the neutral interest rate is rising, it is on its own reducing the restrictiveness. You see? Like the inflation expectation raises the neutral interest rate, which then has the Fed funds rate standing still and moving ever closer to it, reducing the restrictiveness. This is again what he is talking about on the opposite side. So you think about, like, if the Federal Reserve was to move too far, right, and starts to lower rates, if the neutral interest rate was to follow the Fed rates back down, it would not allow it to be stimulative. Right? Just like right now, if the neutral interest rate was to rise and the Fed was to stay still, even though they're an elevated Fed funds rate, if the neutral interest rate rises, it reduces the restrictiveness. If the Fed was to lower rates too fast, and the neutral interest rate was above the Fed funds rate or above their level of neutral, then what you would end up finding is that if the Fed kept moving down and the neutral interest rate moves down, there's no room to stimulate because it's not allowing the stimulation to take place as the neutral interest rate falls along with the Fed. This is part of the Federal Reserve's problems. Like nobody incorporates this stuff. Like I don't know if I'm even explaining it in a way that you can understand, right? Because I get it. I've put it out on graphs and stuff like that. But this is very difficult stuff to try and wrap your head around, considering that nobody knows exactly what this neutral rate is. And also, most people don't believe or understand that the Federal Reserve is going for an average inflation rate over time and not a target. So between all this, most people are missing it, what it is that the Federal Reserve is attempting to do and what that action actually has as an impact on the economy. If the inflation expectation was to fall along like what was happening all up until 2018 after the great financial crisis, then what will happen is that the Federal Reserve will not be able to stimulate the economy as the neutral interest rate will fall along with the Fed funds. It's absolutely critical to keep an elevated inflation expectation rolling into the future. Yeah. What do you guys think? Like, I mean, where are we at? 17 minutes into this? Okay, I'm going to leave it at that. I mean, I'm sure we could probably just keep loading it up with information, but already, this is a topic that is very hard to wrap your head around. If this is the very first time you've ever heard of the neutral interest rate, then, monetary policy must be very confusing out there, considering that the Federal Reserve is in a position in which that the neutral interest rate is their absolute issue that they have right now. The low neutral rate from back in 2018, it was even prior to that. Like during the great financial crisis, I was reading some Fed documents that were talking about how far they would have to drop the Fed funds rate to stimulate the economy at that time. And there was some speculation of needing to go negative 6.5% to get far enough below neutral because the neutral interest rate had even gone that low, right? And in order to stimulate the economy, the Federal Reserve would have had to go negative 6.5%. Like 6.5% on the Fed funds rate negative in order to be stimulative. That's why it was so much quantitative easing and, the idea of hyperinflation and all that stuff pushed out there and the asset purchases and all that other stuff because the Federal Reserve was in a bind. Right? But they learned that they could stimulate the economy without having to actually lower rates. Because like I said, or like the Federal Reserve was saying, 6.5% negative would have been a nightmare. All right. Oh, let's cruise back up here to the top. Any questions? Let me clarify anything. Wow, look at all these people. Right on. What do you think the chances of negative interest rates are like they've done in Europe? Very low. Interesting question. Back in the late 2019, prior to the pandemic, Trump was floating the idea of the Fed implementing negative rates, then refinancing our debt. Okay. So let's think about what a negative interest rate really is. Okay. So how is it that okay. Let's step it back here just a minute because we had this negative interest rate. Let's take, for example, I have a bond. All right. Let's just say this is a 10-year bond, the monetary policy speech. Right? So I have a 10-year bond here and I just bought it. Right? And there is no more paper bonds. They're all digital, right? So it's not like you can get an actual bond with coupons attached to it. But we can imagine for just a second that I have a paper 10-year treasury here and it has $100 face value. and it has 10 coupons on the bottom of it, right? Pays once a year, 10%. Okay, and so this is all imaginary, this hypothetical. Now, I just bought this bond, okay, and I haven't collected a single coupon off of it, and it's like brand spanking new. Woohoo. Okay, so I paid $100 for it, and I get 10% coupons, and the face value is $100. So essentially, what that is saying is that this bond will have 10 coupons along the bottom, literally, that I could rip off, go to the bank and cash in. I would get my $10. I could do that once a year until I have gotten all the coupons paid, and then I can go and cash in the bond because it will be matured and get my $100 back. So this is the loan payment, are these coupons. Now, at any given time, I can sell the bond off with the remaining coupons to it plus the face value. So, okay. Now, we're just going to imagine that I had just purchased this bond and it has all the coupons to it, and I paid $100 for it. So it has a 10% yield to me because I can take off each one of these coupons. It pays 10%, and I'll go and get my $10 for it. At the end of it, it will have paid me 10%, get my face value back, 10% yield. Now, I can sell this bond, right, as is, with the same coupon rates, and because it doesn't change, right? The bond doesn't change whatsoever on who it's, it doesn't matter who owns the bond. It's going to pay whoever owns it, and it's going to pay a 10% coupon on according to the face value. But I can sell it for whatever I want. Right? So now, if I sell it for, say, $110, investor says, hey, man, those things are in high demand right now. I'll give you more than what you paid for it. Okay, well, I paid $100. You pay 110, I'll get my $10 back, and just consider that a quick turn. Okay, so now the new investor who has purchased the bond that was paying me 10% yield now pays him 10% coupon, but if he was to hold the bond to maturity, he's not going to get as much at the end of it as I would because he paid 110 and I only paid 100. Right? So now he's making $10 less than I would off that bond. It's now yielding him like 9% or whatever. Right? So the bond didn't change, but the yield that I paid for it, or the yield that I get for paying for it, or the new investor pays for it, has fallen. If that bond keeps going up in price, the yield keeps falling. Right? And again, the bond doesn't change, but the yield keeps falling. So now this bond has gone up so much in price that the investor buys it and holds on to it to maturity, will get back less money than what it paid for. It's negative interest bearing. It's a negative yielding bond. The bond itself didn't change, right? $100 face value, 10% coupons, but the price the investor has paid for it now means if he holds on to that bond to maturity, he will get less back than the principal than he paid into it. It's a negative yielding bond. It doesn't make any sense why an investor would do that. Like, who would refinance a corporation by buying their bonds that is going to pay them back negative yield? Does that make sense at all in any way? It doesn't. Like, it's hardly, you can hardly wrap your head around how it even occurred in the first place. But now we think about this for just a second. I'm not looking to get the return on this bond. I can care less about the return. What I care about is the speculation of the price that it will sell for. So whether it's positive yielding or negative yielding doesn't make any difference to me so long as the price goes up and I can sell it for a profit. So now you have investors who are looking out there and seeing central bankers, quantitative easings and all the other stuff going into asset purchases and driving the yields down. And they're thinking, well, if they're buying in, I'm going to buy in and sell my bond to them when the yields go down further and the prices go up because of all the massive quantitative easing that they're buying. Well, then it gives room for the market to step in and play the game. They're like, yeah, sure, it's a risk of a negative yield, but I plan on selling it when the prices fall. So I'm speculating. It's like you're speculating on a chunk of gold. It doesn't yield you anything either. And when you buy a chunk of gold, there's no payment, there's no rent, there's no, there's nothing like that. You sell it off in the future to a higher price. It's a speculation, very much like the bond turns into a speculation. So the promise of going into negative interest rates, well, how do you make that happen? How do you make the bond, right, the price of the bond so expensive that the yields on it go negative, and that's a worthy thing? Like, does this make sense so far? Like, I mean, Trump, this is what Trump wants to do, right? He wants to refinance into a negative interest rate. How do you get this to happen? Yeah, right? So now, in order to get that bond to go negative, you have to have the Federal Reserve promising to buy. Because really, you have to have market participation in it. It can't happen without the market participation. If they weren't involved, then you wouldn't have the ability to drive the speculation into the idea that you would be able to sell it off into the future for a higher price. See, if the Fed wasn't there, everybody would be like, screw that, I ain't touching that hot potato, hell no. But if the Fed's promising to be there, then they will be there too. Well, what does the Fed buy? They buy treasuries. Well, how are they going to refinance into the future at a negative rate if it is that they're not going continuously deeper into debt in order for the Federal Reserve to buy something for them to go and refinance into? So ultimately what they're saying is it's like, hey, we want the Federal Reserve to go and buy bonds, right? But then not buy the bonds. Because, right? Like, how is this supposed to happen that you're going to refinance into the future at a negative interest rate, considering that you would have to have speculation into the bond itself that people would then pay more for it than what they would get a return on? Right? How do you keep that speculation running rampant within the markets in order to do something like that? This is like the confusing task that I believe that not only doesn't make a whole lot of sense to just about anybody out there, but the manipulation tactic in order to achieve something of this level is not like it's a healthy position to put the economy into. That's the way I kind of look at it. If you really want to deal with the problem, what you do is you work harder, take less, and pay off debt. That's how you figure. You can't, like, you may magically make it disappear into a negative interest rate. Like, how do you plan on doing that? It's like that doesn't work like that. All right, let's cruise down here a little ways. So many comments. Wow. Oh my gosh. Okay. Whoops. Oh, I'm sorry. I just accidentally removed a comment. I did not mean to do that. I am so sorry. I was just clicking my screen. I apologize. View deleted message. Here, maybe I can bring it back. I can't. I don't know. Maybe All Nighter can. I am sorry, CD. Mac and Matt. I'm sorry, CD, bro. I did not mean to do that. All right. Greed can't be simply wanting more than you have. I think greed is typically wanting more at the expense of another. Free market capitalism is everyone volunteering, creating together. I don't know, like, what's greed? Greed's a matter of opinion, right? I mean, that person's greedy over there. I don't think so. Fine. I mean, it was just like, I don't know what greed is a matter of opinion, as far as I'm concerned. In that, it's all in perspective. The thing is about it is that greed is greed like an internal feeling that you get. See, I think about it. Commercial fishermen, like All Nighter, can attest to this. Right? Commercial fishermen will feel it in the middle of it. Like when you're in the middle of it and you are pulling fish and you are like loading up, it's almost like a frenzy. Like all you see is more, just get more, get it while you can, get it while you can, get it, because it's not going to always be here. Get as much as you can. And once you have it all, then figure out what to do. And then you can figure out who you can give it to. Whoa, damn bee. So last time I got stung, I swelled up so bad, and I'm thinking, man, I don't know if I'm now allergic to bees. Like, it was bad. My whole hand swelled up. Just fly out the damn door. All right. Oh. There we go. All right. Locked out. All right. I forgot where I was at. Oh, but greed. So when you're in the middle of it and you've got this big pile of it, then you can figure out what to do. You can figure out who to distribute it to, who it is that's worthy of it, all the hard work and effort and everything that you put into it. Now it can be, distributed in the way that you feel is most appropriate, or maybe it's all for you. right? I mean, who knows? But in the mid, when you're in it, you just get it. You get as much as you can while you can, because it's not going to last forever. And people who don't take on that feeling miss out, right? They miss out on getting massive, a massive option to them or opportunity or whatever. Greed can be good. All right, there's an acceptable amount of greed. I'd say healthy amount, and if you don't have some, you're unhealthy. That's true. We talking women or whatever, We are having these convos at Moneyless Society. The problem is people are comfortable being comfortable. I bought a lot of gold, silver last year to protect my assets, not from greed, but any profit is certainly welcome. My metal is worth 20,000 more than last year when I bought it. Good for you. See, and that's like, when you're in a position like that, it makes you feel really good. It feels like, man, I've got this insurance policy. I've like, even if I have to sell it off, at least I sell it for a profit, and so that puts you in a really good position. No, you miss out. The journey is reward, not retirement. No, the enjoy the process. That's what it is, right? You enjoy the process. To say that I'm not going to be greedy in this process means that you may miss out. Like, I think about it myself. I would love to be making more money, right? Who wouldn't, right? Like $10,000 a week, or $100,000 a week. Who cares, right? Whatever amount it is. And I know how to go and get money. Like, I am offered every single day, every time I open up my email, it is just nothing but sponsorship offer, sponsorship offer, sponsorship offer. They want access to the 144,000 subscribers, right? They're willing to pay top dollar for it, and it's constant. And I turn it down all the time. I'm like, nah, it doesn't feel good. I don't like it. I don't want to make my money that way, right? So I'm egotistical. I'm egotistical in the idea of how it is that I want to make my money. So I'm greedy in the sense that I want the money, but then I'm also egotistical saying I don't want it that way. Right? Like, how is that supposed to be? It's just like, okay, so you want money, you built up this channel, you have access to 144,000 subscribers that sponsors want, and I don't take the money. Like, all these other influencers out there are dying to be in this position so they can do exactly that, take the sponsorships and make all kinds of revenue. And here I'm egotistical saying, no, I don't want to do it that way. I want to work hard for my money. I want to provide something else. I don't want easy access to this money. Like, what kind of mental issue is that? Right? In order to block your own ability to be successful. Right? I mean, it's just like, it was funny because I was actually telling somebody else about this a while back, and I said, man, I could have had millions by now, and they're laughing at me. Millions, I tell you, ha ha ha. And they're laughing at me, and I'm like, I'm not laughing. I don't think it's funny, right? I mean, I could be done right now, but I didn't do it. Why? Because I have a mental issue of being egotistical. Yeah. Where's the greed? Where's the greed in that? All right. You talk about it so much. Why don't you just take the sponsors? Because I don't like the way it feels. I don't like the way that the video feels. I don't like the feeling that I get from it. Like, I love the feeling I get from making these videos, from coming out here and talking, live stream and answering questions and breaking down economic theory. And man, it's my passion. I love it. I feel good about it. I feel like, inspired and excited. When I do the sponsorships, I feel down. I feel depressed. I feel like, like unworthy and like all this other stuff, like all the things that I don't like as far as feelings go when it comes to making videos and doing this YouTube channel. All the crap that I would feel from it is existing in these sponsorship videos. And it was just like, again, egotistical, right? I don't like the way it makes me feel. All right. Yui is an artist in a lot of ways. Well, thank you. Oregon prodigy? Prodigal? I can't read. I can see the Oregon part. Prodigal? All right. People who want money deserve... All right. Get out of here with that. Times are cold. Won't open your pores and let fiberglass in. Shower. Oh, guys talking about building. All right. Hey, UE. What's your opinion on the 48-page ECB paper? You have time to look at it. I perused some of it. I mean, I was real impressed with just the first few parts that I have read. But to be honest with you guys, it's a lot to get through all that stuff, you know? And so I haven't really actually dove that far into it outside of the few pages that I was reading towards the beginning of it. I would really love to get the information, but it's all, I mean, it's not like I would say that it's not accurate, but it is like, you know, these other central banks talking about this other central bank, right? And so to me, like the information I'm diving into is the central bank itself communicating their monetary policy. So if they're exposing something of this other central bank, I mean, is it something that would be a secret? I don't know. Like, I would guess I would have to go in there and say, okay, well, what do they have information in there that hasn't already been presented out there within the Federal Reserve itself? Now, when I did go through a lot of that document, it is like breaking down you got like mathematical formulas that are like so like crazy looking. I'm like, what the hell is this? You know, so I don't know if as much of it is like, you know, talking about the technical, you know, the technicalities of it all, you know, as far as that goes, and as much as like the theory of what it is that's taking place. But you're right, I should go in there and read that thing more, considering I brought it up. Oh, I see, all-nighter. I was thinking the other way. Paul says Russia just 7 times their monthly gold acquisition. That means a lot. Yes, America has always been this way. Having kids, anyone can do, but having straight kids is challenging now for most. Without serious conflict, our world reserve status is done for very soon. No, it's not. No, it's not. Paul, I really doubt that. I doubt it in the way that this is the problem that most people are going to face as far as a world reserve currency loss, or a dollar losing its world reserve currency. And that is that contracts around the world are written in dollars. That means, like, I can understand that if it's like massive, like depressionary effects, because that's ultimately what it's going to end up being, as people are not going to get paid. Contracts around the world are written in dollars. Everybody is wanting to get paid. Nobody doesn't want to get paid. Everybody wants to get paid. And so if there is a situation in which that they are going to not get paid, you're right, they are going to lose their mind, right? So if the Federal Reserve was ever in a position in which that they were to reel back on the dollar issuance, the reserves, the liabilities, if they were to, you know, go into massive quantitative tightening and start bringing that money back in, what they are going to do is they are going to deprive the world of the ability to pay those contracts off, and they will lose their shit. So you're right, it will create conflict. But it's not because the dollar is the world reserve currency, it's because they are literally trying to stop the dollar from being used, reeling in the dollar, not quantitative easing, quantitative tightening. And that will create the conflicts, as people will lose their mind if they cannot get their contracts paid. And it'll slow global transactions. There will be massive depressions. You're right, there will be war. And that's what's, you know, the unfortunate thing is that there will be nothing that can rise from it. And there will be something that rises from it, but there's nothing that of current presence that has anything even remotely close to doing what the dollar is doing. No nation is wanting to do it. There is not a single nation out there that wants to be the reserve currency. I assure you that. The nation that does it will have no exports. They will be in constant trade deficit. They will be in constant money expansion. They will be in constant military conflict. Right? They don't want to do it. They want to take advantage of the situation. China's doing it. China's doing a great job of taking advantage of this situation. You know how many debts that they have issued out to poor nations to build up their infrastructure, and they did it in US dollars? All right. Go and read Dollar Funding Stresses. Let me see. Do I have that over here? I was looking at it the other day. I was cleaning my truck out. Dollar Funding Stresses in China. Yeah, I got rid of it. is a paper that the Federal Reserve wrote up talking about how much dollar-denominated debt is coming out of China, like China issuing out dollar-denominated debt. And then they go in to talk about how much debt that they have spread across the globe in US dollars. Doesn't have anything to do with the United States. This is between them and some other nation. And they are doing deals where they are like, here, you can borrow billions of dollars to build up your power plant, your mining operation, or whatever. Here, it's in US dollars. It's the cheapest interest rate, and you're going to be able to go and buy whatever it is around the, do the project with it, because everybody wants US dollars. Now that country is suffering, global slowdown taking place. They can't acquire the dollars to pay off the debt. China's like, we're kind of ruthless, though. That's our power plant. That's our mining operation. That's our port. Right? This is how they're doing. And they're like, yeah, go ahead and strengthen the dollar. Every time you strengthen the dollar, it's a benefit to China. Right? And this is a Federal Reserve document talking about this. This isn't some conspiracy theory. We did a video breakdown of this in a members only live stream talking about this particular topic, right? Breaking it down, and communicating what it is that the Federal Reserve is trying to say is going on in the real world out there and what their problem is, because they have to provide the world with liabilities. That means they have to issue out debt, or they have to buy debt and issue out their debt, which is the liabilities, which is money to us, or currency, really. The Federal Reserve notes the cash. So they buy assets, which is treasuries, which is the debt of the government, and then they issue out liabilities. That's their, debt. They need to get that liability back. And that liability is what everybody is using for the world reserve currency. And so the liabilities of the Federal Reserve are incredibly high demand. And the Federal Reserve is like, how the hell do we continue to provide the world with liabilities without completely crashing the government? Like, the government can't continue to go into this debt issuance. And what asset are we going to buy that's going to allow us to continue the expansion of the money supply? This is a very difficult position we are now facing because the government's on an unsustainable debt path. If this continues, they will crash. Now, the Federal Reserve says they are not in a position in which that is not repairable or, it's still sustainable, I guess is what they're trying to say. But it's on an unsustainable path, meaning if we continue to do this, it won't work. They've admitted this. Now, what I found very interesting about that particular topic right there is that if you go and, let me see if I can find it here. If you go way back in time, take the old time machine, right? And you go back to 2002, and you're going to find a Ben Bernanke speech talking about deflation and how to ever prevent it from occurring here in the United States. November 21st, 2002. And again, this is coming from Ben Bernanke. Title of it, Deflation, Making Sure It Doesn't Happen Here. And down at the very bottom of this speech, you are going to find something very telling. And that is, let me see if I can bring it up here real quick. I'm trying to find it on my computer because I want to read it correctly. And that is the ability for the Federal Reserve. Let's see here. It's for the Federal Reserve to be able to buy foreign assets. Shit, how come I can't find it here? So basically what they are saying is that if they ever came into a position in which that the Federal Reserve was having issues stimulating the economy because they can no longer buy the debt of the U.S. government, they have a huge market out there that they could tap into, and it's the purchasing. Here we go. Okay. Sorry guys, thank you for sticking out. We got 344 people. Go and hit that like button. 140 likes right now. Let's get it up to 200 likes before the hour mark, and see if we can get a few more people to join in on this. It says, I need to tread carefully here. This is Ben Bernanke's speech. He says, because the economy is complex and interconnected system, Fed purchases of liabilities of foreign governments have the potential to affect a number of financial markets, including the market for foreign exchange, or including the market for foreign exchange. In the United States, the Department of Treasury, not the Federal Reserve, is the lead agency for making international economic policy. So this is the problem that they would face. Now, before that part, I mean, I guess that's the issue that they would find from it. But he actually says right at the beginning, right before that part, he says the Fed can inject money into the economy in still other ways. For example, the Fed has the authority to buy foreign government debt, as well as domestic government debt. Potentially, this class of asset offers a huge scope for the Fed's operations, as the quantity of foreign assets eligible for purchase by the Fed is several times the stock of U.S. government debt. So the Federal Reserve is saying it over and over again. The U.S. government debt, right, is the U.S. government's on an unsustainable debt path. How is it that the Federal Reserve is going to provide the world with liabilities? Right? There's a huge demand for it. Injecting money into the economy through the purchases of assets, mainly the U.S. Treasuries, is on an unsustainable debt path. This doesn't work. It can't continue. And so, like paying attention to what it is that's happening right now within the Federal Reserve, and especially when it comes to like the establishment of central bank digital currencies and stablecoins, understanding what's happening here back in 2002, and that the Fed knows that there's going to be a point in which that they are not going to be able to just buy the U.S. Treasuries, but they're going to have to tap into the foreign assets that are out there. How do you control this? How do you do this without creating the foreign exchange instabilities or being managed by the Federal Reserve itself when the Fed has left that task up to the Treasury? See, the Federal Reserve is like, man, how do we do this? How do we conduct our monetary policy the way we typically would, but yet have this issue with the asset purchases and driving the government into debt? How do we handle this position? This is very difficult. Now, again, I'm not trying to like communicate what the Fed is doing, but the speculation that is coming into stable coins, like the Fed has talked a lot about stable coins, and they talked a lot about the issue with the unsustainable debt path. And the dollar is the world reserve currency. There's nothing else. There's no second place. So this is like, they're stuck. They're stuck in a really hard position of trying to provide the world with the liability and not destroy the United States government, right, on the unsustainable debt path. Now, if you have a stable coin, let's take this for example. Let's say you have a stable coin. And with that stable coin, it's being backed by dollars. So essentially, you have a digital currency that is the electronic equivalent of a dollar. Now, it's not a dollar, right? It's similar to a dollar in the sense that, hey, these two operate almost exactly the same way. Whether you have cash in hand or a stable coin, they do the same thing inside of the economy. You go to the merchant, you say, hey, I got stable coins, I got dollars. And then the merchant's like, hey, either one of them, they're the same thing, right? So this is really where the Federal Reserve can now inject money into the system while still staying within their monetary policy, right? Because anything that happens to the dollar or anything that's being backed by the dollar, any monetary policy will then transfer into that item. So as long as the stable coin is being backed by the dollar itself, the dollar doesn't really actually have to be in the economy. The stable coin can be. So now you got stable coins in the economy with everybody under the idea that it's the same thing as a dollar. In fact, they probably won't even realize they're using stable coins. They think they're using dollars because it's essentially the same thing. Okay? Now, if you have a stable coin that is being backed by a dollar, that dollar, right, is a liability of the Federal Reserve's balance sheet. Okay, so again, like, you know, the liability of the Federal Reserve is our money, it's the dollar. It has a balance sheet with U.S. Treasuries on it. But they're saying that it doesn't have to be U.S. Treasuries. It can be foreign assets, right? For example, has the authority to buy foreign government debt. They already have this authority. They don't have to ask permission. They got it. They don't do it. That's typically for the Treasury, you know, the government to deal with, you know, as far as the foreign exchange stuff. However, now they have this ability to have their liabilities, right, that's backed by the stable coins. People, you know, everybody's using stable coins like they're dollars. Their liability is what's back in the stablecoin. That liability has the Fed's balance sheet holding foreign treasuries, foreign government debt sitting on it. Like, you see what's happening? Now, the stablecoin is the electronic digital currency, right? Essentially a central bank digital currency, being regulated and controlled by the government. Once it's a digital currency, you'll be able to control the flow of the money, where it goes, who gets it, what it's being used for. You see how this is working out? Like, it's just playing out. And it's not surprising to me. Like, I called this stuff out a long time ago when I read about how it is that the central bankers out there are planning on going into a cashless society. And the reason that they need a cashless society is so they can take net interest rates into negative territory. So if you want to believe in the negative territory kind of thing, you would have to have the central bank digital currency up in operation, or something equivalent to it, like a stable coin. Once you have the stable coin, now you have a position in which that people cannot get out of. There is no other, you can't cash out. Stable coins will be in the banking system. Right? It'll be in an account, it'll be in an app, it'll be somewhere, but it won't be in your hand as physical money. Right? And so now, once you're locked into the system, they can take interest rates wherever. You can't get out. Right? The only way you can get out is to take it from the stable coin and go into stocks, go into the housing market, go into buy groceries, go and get rid of it as quickly as possible. Talk about how easy it would be to push money velocity if you put a time limit on that stable coin, on how much time you can actually hold that particular currency before it begins to lose purchasing power behind it. Forcing people to go out there and spend it. This is like a central banker's wet dream, Thank you for the $14.99. Let's see who sent that. Oh, we got two of them here, right on. Pinch and Pennies, thank you so much for the $10. Hey, UE, I looked back at some of your videos when you were buying a home and the stress about affording it. Well, I'm in those shoes today. All I got to ask is, how are you feeling about it today? Yeah, Pinch and Pennies, man. Thank you for going back and watching my past videos too. I really appreciate you doing that. Yeah, dude, super stressful moment for me, right? Because it was right before interest rates went up. I got my house at 3.125%, so 3.125%, right? And I was nervous as hell. I figured these interest rates are on the way up and housing market is going to crash. I am going to be underwater again on a super expensive home, right? And it took everything out of me, like literally everything. I had $300 left in my checking account when I went and got the down payment. Like because at first I thought I was going to get a different loan, but I had this foreclosure in my past and it was hidden from on my credit rate. I don't know, like that was a whole thing on itself, but like my mortgage lender didn't see that I had a foreclosure on my credit history, right? And that has a lot to do with Oregon as a non-recourse state, and I'm not going to get into all that stuff. But anyway, because I didn't acknowledge my debt, it wasn't showing up on my credit report. Now, I didn't have access to the loan now because of this foreclosure in the past, because the underwriters are like, no way, man, you are not going to get this loan. You had a foreclosure in your past. You're going to have to figure something else out. And that's when the mortgage lender is like, dude, you're going to have to come up with a lot more down payment, like a lot more, like double what you have. And I'm like, bro, double? Like, I barely got what I got, and you want me to double it up? So I started digging, right? I had a cash emergency fund, dumped that, had, other little places, like I had a PayPal account that I had never touched that people had been sending me PayPal tips to. It was like the only way that the channel was actually monetized at the time was literally through the donations of the viewers. And I only touched it occasionally to take the family out to ice cream or something like that. But I held on to all that money. Thank God I did, because I used all that too, right? It was, in fact, that was the last little bit that I needed, was the PayPal tips that I had received from starting the channel, and, the people really encouraging and, wanting to, contribute to the channel. If it wasn't for that, I wouldn't have gotten the house. Like, it was like literally took everything. Right? And it was a lot. It was so much. It took so, like, mentally, it was so deteriorating on me. Like I could literally feel the mental deterioration taking place because I was so stressed out about it all. And I knew the housing market was going to go down. Right? I mean, like everybody said it, I said it. Once the interest rates go up, the housing market's going to go down. They won't be able to afford the payments. It was true. They won't be able to afford the payments, but the housing market didn't go down. The housing market went completely the other way. And as soon as I bought the house, the very next month, the ZELLE estimate started going up. Right? And it went up every single month. Every single month for the year after I had purchased it. In fact, it had gone up so much at one point that it was ridiculous. Like, obviously, the ZELLE estimate is not accurate, and I get that part. But still, to see that number go up more than what I could, like, the house equity was going up more than I could earn through my job, through YouTube, my wife's job, like all the income that we had, the house would go up more in value than I could earn in money. Like it was earning more money than I could, right? With all my efforts. That was what was happening. Now, a great deal of that came out. Totally expected it to, because it was so unrealistic how much had moved up. So I didn't think it was reality to begin with. So when I saw this huge number come off of the ZELLE estimate, that made sense to me. But where it has landed today, like, I mean, at one point it was like ridiculous. It was like $150,000 or something, like above what I had paid. And I'm like, where in the world did this come from? And then a couple of months later, it was dropping $50,000, $70,000 off of that. And I'm like, okay, there we go. All right. So some unrealistic algorithm caused it to go way up for a while. However, when it did land, it's landed here and it's been at this price for quite some time, which is about, I don't know, 10, 15% more than what I had paid for it, or what I had, taken the mortgage out for. And considering how much I had to put down on the house, I am so far from underwater. I literally have over $100,000 equity in this house right now. And I had put 10% down on it, which is now, I don't know, it's better than 20%. Like, I mean, the price of the house right now would still have to drop probably 25% before I would go underwater. Right? And so that's like, I feel so good about this purchase. Like everything about it. I got a killer interest rate on it. The house price went up. I'm in the neighborhood I want to be in. I'm like enjoying everything about it. I like the feelings that I had the day I bought it have completely gone away. Like I don't feel anything of that anymore. And it's funny because, a lot of people are telling me that I'm a flip-flopper and, I fear missing out, or like, I bought a house because I was fear missing out right before the crash or something. Like, I mean, all this stuff, right? All these people jabbering in my ear, telling me how it was going to be and all this other stuff. I'm becoming a property owner, yeah. I'm separating myself from the poor. I'm not mean to be like an arrogant dude about it, but it's happening. And I'm now realizing that here's the thing. Everybody's going to want to wish and hope and dream for their opportunity to become a property owner. I get it, right? I lost my opportunity earlier in life because I was not paying attention to what I was doing. I was depressed and drinking and screwing up, and I lost the house, and I ended up paying the consequence for it. I had to suffer through a lot of sacrifice, wants and desires and dreams and stuff, so I could pursue nothing but excellence in order to get it back. It was very hard. It was so hard, right? And I look back at it and I'm thinking, man, all this hard work is going to get lost in the purchase of this home. I'm going to lose all this hard work, everything that I've been doing, right? It didn't happen. You know why? It's because property ownership is the way to wealth. Okay, I'm wearing the Rebel Capitalist shirt. I go and hang out with these millionaires. Every one of them did it in property. They all did it with real estate, right? Maybe a couple of them didn't. All of them did it with real estate. Now, I'm going to sit here and try and reinvent the wheel and say that it's not property ownership that's going to put you on the other side of the wedge. No, it's not. Everything you can do to get into a house, make sure that you can keep it, right? Be in a position in which that you can keep that house, not the dumb shit drinker, not chasing excellence, pursuing whatever the hell it is, and then lose your house. Not that dude, right? The dude who's chasing excellence, the dude who's, trying, the guy who's, out there trying to make it. and get that house and get that property and get more properties and rental properties to buy dividend paying stocks, to get out there and become the capitalist. Now, it's not a game, right? This isn't a game. This is survival of the fittest. This is wild kingdom out there, right? And people who are wishing and hoping and dreaming that they're going to vote for somebody who's going to make it easier for them, it's delusional. They're not going to get it. They might be in a position in which they get something off of it, but with an expectation that is external instead of internal, one that is not pursuing excellence, how in the world is the universe going to provide you with what it is that you desire? Right? It isn't. It's going to deny you, actually. Matthew, the lumberjack landlord, when we were down in Vegas last year, he sat me down. It was like there was a group of them. I think I've told you guys this story before. There was a few of them. We had Millennial Mike and Dion, and these guys are sitting there, and it's like I'm sitting on the couch, and it's like they're like around me, like we got this round table thing going, right? And they're like, okay, bro, what is it that we need to do? Like, what is it that we need to do for you? And, and I'm like, I don't know, man. Like, I'm trying to figure things out or whatever. And they're like, well, we're here to help. We have built up this thing, and we're encouraging you now to do something, right? And I'm like, holy crap, man, talk about the offer, right? Here these guys are, they're sitting there. And so I'm talking to them about some of the things that I can do and, to advance the channel and, to do things. And we got to talking about the story, about buying the house. And, Matthew loves the story. He loves the story, what I tell, because he told me, he says, man, that is exactly the way I felt when I bought my first house, right? That it was going to sink me, that I was making the wrong decision, all this stuff, like all that nervous wrench, make you want to throw up, can't sleep, all the worry and everything. He says, dude, I experienced that exact same thing. And in fact, everybody who buys property experiences that. That's part of the experience, is this gut-wrenching, nervous, I'm making the wrong decision, don't know if this is going to work out, this is going to be the one that tears, that causes me to be home or whatever. Like, you get all these worrisome feelings that come from it. He says, dude, I felt exactly the same way when I bought that first house. And he says, you know what? He said, I felt that way when I bought the 40th house too. He says, it's going to be the one that sinks me, and this is going to crash, this is going to be the what. On the 40th house, he said that, right? He says, by the time you get up to, over 40, he says, they're not so bad anymore. He says, but all of them, all property purchases have that to it. Expect it. Just expect it, that it's going to be there. And if you're having a hard time, just try owning it. Try owning the nervousness. Like, I am nervous about this thing, and I don't care. I'm going to go through it too, even I don't care how scared I am, right? And that's the only, I don't know how else to advise it. So, alrighty, Wayne, thank you so much for the $5. Since I haven't bought a pack of smokes in a few weeks, hence playing a crazy syntax, or paying a crazy syntax, here's a small percent of my savings. Hope you're all thinking positive. Well, right on, Wayne. Thank you so much for the $5. Yeah, so if you're not smoking, I guess I can't make my money off of Altria, right? And if you're going to tip me for saving that money, I appreciate it, man. So, hey, yay syntax. All right, I appreciate you, Wayne, man. I appreciate that very much. All right, back to the live chats. We're up to 199 likes. You were so close, man. So close to that 200. If I heard you bury a family member on your land, no more tax, no more liens. Wow, is that true? Santi thinks I'm rich. That's rich. Hey, right on all night. Hey, you know what? This is the thing. Let people think you're rich. Let people think of whatever they want of you, man. Like, just be the congruent man. You are who you are. All-nighter, I have never known you to be a faker, that's for sure, man. So, if people want to think, people think I'm rich, I don't care, whatever, think I'm rich. I'm not. Like, I am struggling like hell trying to figure out what it is that I need to do to become rich. right? I think I'm working on it. I'm trying. I'm pursuing things. So, I mean, I'm on my path and I'm enjoying the experience of going there, but I'm far from rich. And it's funny because I have rich people who come to me and ask me for advice on what it is that they need to do with their money. And I'm like, this is so cool. Like, I just love it because they love my genuine, like, objective view about what it is that's happening out there. They don't like they know I'm not influenced. And so when I'm giving them my view, I'm giving them an honest view of what it is that I am seeing out there from literally sitting up on a hill, like looking at the economy, watching it all. And I don't have like, I don't have any intentions. I don't have any, I don't with their money or whatever they do with it. Like if they decide to keep it, spend it, throw it away, it doesn't mean anything to me. So when they get my opinion, they're getting an honest opinion about what it is that's happening out there in the economy, and they really appreciate it and they find it valuable. I can't believe how many millionaires have like come to me and say, dude, what do I do with my money? And I'm like, how the hell did you make money? Like, yeah, you're in a position in which that, like I want to be in, right? But you're asking me about it, and I understand why, right? Once you have skin in the game, you have a lot more to lose. Your view is no longer objective. You're very, you're very, it's like, or you're like, your concern level is now swaying how it is that you interpret the view. You know, it's like, it's like it's almost like a an inhibitor to understanding what is going on within the economy because you're so concerned about what's going to happen to your money. If you have no concern over it, then you don't think about it, right? You don't think about how you're going to lose everything or what's going to go on or anything like that. You just look at it and just say, oh, okay, this is what it is. But if you don't have any concern about whether or not it's going to rise or fall or anything like that, then you get to just look at it for what it is. All right. The interest rate cutting goes wrong if the result is the rich get more and more wealthy. Well, the problem with that, Captain Happy, is that regardless of what they do, that's going to take place. You have to understand there is going to be ever growing amounts of inequality. You can't stop it, right? In order to stop it, the painful experience that would take from it, that you would be disapproving of that even more so than the unfairness of what we are viewing taking place. It's like if we didn't know the inequality existed, really is like we just compared it. It was just like, man, they have so much and we have so little. But if you didn't know, like think about it, like is your life that bad? Like maybe your life is in comparison to what it might have been in the past or maybe to somebody else's. But really, you think about it, like we have cell phones, we got lots of advanced medical technologies, we got all kinds of stuff in this society that is now better than in any time in history. And now, again, that might be a matter of opinion, but in my opinion, the ability to make money is so prevalent out there. It's it's like I don't understand why more people don't do it. I understand that it could be difficult and that it takes time and you have to build it up, and just finding a traditional 9 to 5 job is just so much easier than trying to build up something over time that is, something like a YouTube channel or an online business or whatever it is. But the capabilities are so prevalent out there. Communication like we can connect with people all over the world. I think about like the network that I had built up just from having the YouTube channel. It's just incredible. Like this is stuff that we didn't have 20, 30 years ago. And so in today's world, we have massive amounts of wealth, and we just don't recognize it. Food, conveniences, and pleasures of life. That's it. That's wealth. That's what Cantillon describes it as. Food, conveniences. In fact, the chapter on wealth is so short, right? Like, let me see if I can find it here. 21, here, page 21 is right at the very beginning. Yeah, wealth. Cantillon defines wealth as the consumption of goods produced by the land and labor. This contrasted with the mercantilist who thought money was wealth. Land is the source of matter from which all wealth is drawn. Man's labor provides the form for its production, and the wealth in itself is nothing but food, conveniences, and pleasures of life. Land produces grass, roots, grain, flax, cotton, hemp, shrubs, several kinds of trees, with fruit, bark, and foliage like that of the mulberry tree for silkworms, and it supplies mines and minerals. From these, the labor of man creates wealth. Rivers and seas provide fish for food of man and many other things for his enjoyment. But these seas and rivers belong to the adjacent lands and are common to all, and man's labor extracts fish and other advantages from them. Wealth is food, conveniences, and pleasures of life. That's it. Right? And so, understanding that we live in a very wealthy nation when we have food, conveniences, and pleasures of life. Now, we can compare it, right? And we can give it an opinion and we can say, hey, all kinds of stuff. But when we truly look down at ourselves and we think to ourselves, do I have food? Do I have conveniences? And do I have pleasures of life? And what is pleasures of life? Right? To me, it's a view, it's ribeye, and it's some music. Doesn't cost much, right? That doesn't cost a whole lot, right? That's, to me, is wealth. Like, I mean, after that, there's luxuries. Like, I can drive a nicer car and wear nicer clothes and go on fancier vacations and all that other stuff. But the wealth is the food. I mean, I can't think of anything else that I would really want to eat other than a ribeye. Like, that's my favorite thing. I can't imagine being anywhere else other than having a beautiful view, good company. I can't imagine anything than having pleasant sounds. Like, outside of that, like, what else is there? You know, I mean, there's nothing. That's it. That's all there is. You can enhance that in any way you want, but that's the entire existence of wealth. You know, is those three things. So, you know, what is wealth? It's a matter of opinion. I'm fixing the steering column in my van at the moment. Well, right on. Thanks for listening, Charger Mopar. Novice, that's very personal and depends on your abilities and interest. I'm not sure what you guys are talking. Okay. Oregon real estate, but I've been on the sideline. But I've been on the sideline, yeah. Making money is one thing, keeping it all together another, yeah. All right. Rinse and repeat. Absolutely agree, Brody. All the history proves it. More inequality grows the closer to the end is. Well, yeah, I agree. And that was actually the reason why we actually severed ourselves from the gold standard, is because it was coming to an end. Right? All the separation between the rich and the poor had gotten as far as it was going to go. The concentration of gold had then deprived the people of the ability to do transactions out there, because all the transactionable gold had been hoarded by the United States, the richest nation. Right? Just like, you know, we separated ourselves from everybody else out there. Very much like inside the United States, you had separation. It's like the Cantillon effect, no matter how you look at it, as an individual, a family, a state, you know, country, corporation, it doesn't matter. The Cantillon effect is the same. And when you have a concentration of wealth, you're going to come to the end. The rest of the people are going to be like, well, if you have all the money and we don't have any money, then we're not going to be able to buy things from each other, and therefore we all suffer in poverty. And the United States is just like, oh shit, that means that we have to give up all the gold and we're going to fall into poverty and misery. Can't have that. We're going to sever ourselves from the gold standard, and we'll just start printing out money, because that's really all you want, is to be able to do transactions, right? You don't really want the gold, you know, because if you really wanted the gold, you wouldn't have accepted dollars all this time. But you accepted dollars because you kind of thought that they were going to be exchangeable for gold, but they're not exchangeable for gold, but they are exchangeable for other transactions. Wouldn't you like that? And that's what they gave us, and that's what we have. And now people want to get pissed and they say, like, the dollar doesn't hold value. It's like, oh, no, of course not. It wasn't meant to hold value. It was meant to do transactions. That's it. Like, it wasn't meant to hold value. People who say, oh, you know, back in the day it used to be this and now it's this. And it was just like, okay, well, you believe that currency was supposed to hold value. That's probably the reason why you're suffering in pain and misery right now, as you have belief and understanding that the political powers out there should make it hold value. Doesn't do it. It's not part of its characteristic. It's like asking it to do something it simply cannot do. So to understand that it's currency and that you are going to use it to trade your goods and services and time and effort over to other goods and services and time and effort, then you better understand that you have to do it quickly, or be very strategic on what it is that you plan on holding it and how long you hold it for, right? And that's like, once you kind of get it that fashion, then it's no longer like, inflation and this and that cost and all that. It's like, oh yeah, that's part of the game, whatever. Let's move on. Right? Let's figure out how the system works and figure out how to deploy this money that I do have into rental properties or dividend paying stocks or businesses or something out there. But I don't expect the external of an election or something like that to fix the problems that we now are observing on a regular basis, and really just now knowing them to be symptoms and not really anything that you can deal with without suffering and pain and misery. Oh yeah, there's Matthew coming up. Oh yeah, looks like Matthew's coming to hang out with Freddie. All right. Okay, I don't give an F how UT works because it's effed. Okay. I kind of feel sorry for the material rich folks on Earth. They better have their deductions ready when heavenly IRS comes to audit. See, like, here's the problem that, like, and I totally get you, Santis. I totally understand that part, but here, I don't want the rich punished. I don't want the rich punished. I'm poor. Like, I grew up, like, I didn't grow up poor. I grew up in a military family, so we had things provided for us and stuff like that. Right? But I lived fairly poor from the time I graduated high school, because I moved out the day I graduated, and I was on my own ever since then. So I never asked for anything from my family, and I asked, they didn't give me anything, except for like a short time, which didn't turn out too well. But ultimately, I was there, dealing with it. Right? Now, one thing that I've always felt is that I would like to be rich someday. Like, I feel like I would love to have an abundance of wealth. Right? An abundance of it. Just like, just massive amounts of it someday. And I would love to be able to drive, fancy cars and take the fancy vacations. And I believe, like, man, that would be so badass to have that someday. And now I listen to other people talk about how the rich are the problem and tax the rich and they shouldn't have and all this other stuff. And I'm like, but I want that. Like, I want to be there someday, and I don't want to be treated like shit for getting there. Like, I don't want to be punished for being successful. Like, I don't know why would you want to punish success? I don't get that. Like, you want to encourage people to be successful, not punish people for successful. You certainly, like, it's just like, oh man, I'm wealthy, man, I better not tell anybody because I don't want to have the stigma of being wealthy and being looked at as an asshole or something like that for having all this money and really wanting it and enjoying Lamborghinis and fancy vacations and all the other stuff. Like, is this really the society that we live in? That you punish the rich because they made it and you don't have it? Like, I never felt that way. I have never felt that way, ever. I've never felt like, hey, we need to damage and punish the rich and prevent them from becoming rich. Like, I don't see it that way. To me, it's just like, man, make the access into getting rich easier so I can get there. Thank you. I appreciate it. And that's the way I feel about it. And because most people don't take advantage or don't want to work hard enough for it, I'm not talking about you personally. I'm just saying in general, right? I'm just saying, because most people don't want to see it that way, and they look at like all the inabilities or inhibitants that keep them from being able to achieve the way that they want to achieve it. Then they get mad about that, right? Again, it's almost egotistical to think about it that way. I'm not one to try and reinvent the wheel. People who own property separate themselves from the poor. That's like, okay, so it's pretty obvious that if you are not pursuing into property or figuring out something to be like, a capitalist or something like that, then you're probably going to end up being on the bottom side of the wedge, which is going to be horrible feeling, right? So just understand it for what it is, man. Yeah, it sucks, right? They have a lot. They should share. They should do. They're greedy. They're all these other things. Well, I certainly don't want to prevent them from being able to do it. I want to do that. Like, if I get there and I'm generous, then so be it. But I don't want to be hurt to try and get there. I want to be rewarded and feeling like, yeah, this is what you want to do and be successful. So I don't eat the rich. Why, man? I want to be rich, All right, let's cruise down here to the bottom. Paul says, the more you have, the less others have. I don't believe that. All right. I don't believe that for one little second. I do not believe that. If I had an abundance of flowers sitting right here, right, does that mean that those people don't have flowers? Because I have this abundance of flowers sitting here? Of course not. Who knows how I got those flowers? Did I go to the store and buy all the flowers, or did I grow all the flowers? Does it really matter? If I bought all the flowers, wouldn't that mean that the people who grow flowers could grow that much more flowers for everybody to have? Because I purchased them all. Now he has the profit in order to expand operations and provide even more flowers for everybody. Right? I don't believe that. I don't believe the hoarding of abundance denies everybody else the ability to get abundance. There is nothing but abundance out there. That's it. There's only abundance. There is nothing else. If you are lacking, what you are is an abundance of lack. Right? There is nothing but abundance in all forms. And understanding that there is nothing but abundance and that it should be free flowing towards you. That all the abundance of the world can just naturally just come to you. It's not unreasonable to believe that. A lot of people don't. They think it's wishful thinking or magical thinking or something like that. It's not. It's the reality of the situation. There is nothing but abundance out there for you to have. Most people just live in deprivation. They live in scarcity. They live in survival. They live in, they live in hard times. They don't think that, living easily is possible. They've only lived a hard life. And so therefore they must have it hard, because really that's the way they've always experienced it. And anything outside of a hard experience is unfamiliar and therefore uncomfortable. So they don't like it. They don't feel that it's correct, because familiar, which is like family, means that it has to be a struggle, because that's the way we grew up. That's the way we, lived life. That's the way everything is. But that's not the way it is, right? That's the way we interpret it. It's not the reality of the situation. The reality of the situation is everything is easy and in abundance. But we don't make it that way. We don't believe it that way. And so therefore we don't produce a life that's that way because of the way we think. Right? See, this is what gets me. People say, man, you can't make it in this day and age. That's horseshit. You can absolutely make it in this day and age. You got to figure it out. You got to build it up. You got to make it happen. There's people who are doing it every single day. They're doing it right now. You say it can't happen. And I'm like, they're doing it right now, man. You can't say that they're not doing it when they're doing it, right? You're not doing it. You know a bunch of other people who aren't doing it. There's obvious signs of people not doing it, but then there's a whole bunch of people who are, right? So which one are you going to be, right? You wonder why there's so few people on the other side of the wedge. It's because most people believe that there's nothing but lacking out there and that there's no abundance. But there's nothing but abundance, and the people who know that are on the other side of the wedge, right? Or at least living a life of not being in scarcity, All right, moving on here. Very old saying, where there's a will, there's a way. Absolutely. All right. Remember when they told all the slaves to stay home, and they did? Not me. I didn't stay home. I went to work every single day. I had an essential job. I changed nothing about my life. The only thing that changed was the external that was out there. You have to, if you want to be on my property inside this store, you must wear this mask. Man, if that's the way you're going to have it on your private property, and I want to be on your private property, then I will abide by your rules, right? The moment I'm off your property, boop, off goes the mask, because I'm not wearing it anywhere else but on private property if that's your requirement, because I respect private property, right? I'm a constitutionalist. I don't like the rule. Doesn't matter. It's not my decision to make rules on somebody else's private property. That's not for me to do, right? I mean, anybody who says that you shouldn't be wearing masks inside of a store, you don't respect the Constitution, right? People who are saying, no, it's my constitutional right not to have to wear a mask. You're right. Out there on the street, I agree with you. Inside a private property, you do not have that right. And understanding that for what it really is how come it is that I lived my life the way I normally would have the entire time. Because I didn't do anything different. I didn't, outside of the rules of the external, I showed up to work every day. I went to the store. I did everything that I was going to do. Like, I went to the Rebel Capitalist. I went, like, the only thing I wasn't allowed to be in the play. There was one thing that I wasn't allowed to do. A small group of people decided that I couldn't be part of their group. That was it. That was the only consequence that I paid, and it hurt. I wanted to be part of that play. I enjoyed it. I rehearsed very long for it. Right? They said, "Sorry, man. If you're not gonna play by the rule, right? This rule that we have set up, this arbitrary rule, because there's no law, there's no requirement, right? But if you don't want to play by this rule and take the poison, you can't play our game." And I'm like, out of all the crap in my world, that was denied to me. All right, well, whatever. I mean, what am I gonna say? I just was like, I'm not gonna do it. You can either, you guys did it. What are you guys worried about? You're protected. Right? What are you worried about me for? Yeah, nope. Sorry. If you don't want to play our rules, you can't play our game. I get it. Right? I get it. It's your private property or all that other stuff, and I mean, I totally respect that part of it. It's your rule. But my rules. I mean, find somebody else, I guess. And that hurt. I didn't like that. But everything else, I didn't change anything about the way I lived. All right. Nobody wants to play the Jesus game no more. I don't agree with that. I don't agree with that either. You know what I found very interesting, and not to talk too personal about it, I'm not religious. Right? I don't go to church. I don't talk about it. I'm not somebody who could even talk religion because I just don't know enough about the stories or anything. I'm very interested in a lot of the stories, and I like to, talk to my wife about it. My wife, she's very knowledgeable. Like, she knows. She went to church a lot, right? All the way up until she was 16, like all the Bible studies and Sunday schools and all that stuff, right? She did all that. So when it comes to like asking questions about the Bible, she knows. But we're not religious. We don't go to church. We never pushed religion or anything like that on the kids. The youngest one, he's looking through the Holy Bible. All on his own. Good for you, boy. All right? Good for you. Go pick that shit up and learn it. Learn what it's in there. Understand it. Figure it out and learn it for face value. The reality of it on your own. Right? He did this, he's doing this on his own. His genuine curiosity has now got him into that. Right? And I'm not encouraging it. I'm not just anything. Just like, all right, well, yeah, absolutely, man. Yeah, you can, like he picked one up at a yard sale. He said, "Hey, Dad, can I buy this?" And I'm like, "Yeah, you can get that." And whether he pursues it or not, right? That genuine curiosity is really what I loved about it. What is this, Dad? What is going on here? Go figure it out, boy. Learn it. Learn it for face value. Learn it yourself, right? Not influenced by anybody else. Not me. Not anybody. All right. Go out there and figure it out. See what that is all about. See if it's for you. Right? Because a lot of people who had that stuff pushed on them now deny it. And I'm thinking, man, you're denying it? Like, really? Interesting. Yeah. Yeah. Hey, listen. A lot of people about the Bible and what I just said about it, right? Yeah. I gave it a term like that, and you might have taken it in a negative tone. It's not. Right? It's not any means. I have a lot of respect for it, and just because you took it that way might be, something of your own opinion on it. I don't have any negative feelings towards it, or any religion, actually. I agree. Don't push anything on kids. Just give them examples and guidance. Absolutely. Can't give out the address, bro. Yeah. All right, what if one person owned all the land in the US? Would you guys still agree and it's a country? Well, okay, so a hypothetical situation or something like that? I mean, no, of course not. But that's not what we have. So, it's like that's not even like a reality kind of thing. It's just what you just brought up is just like, what if one guy owned it all? Well, what if, aliens were here or something? It's not like that's not reality. Uh, I like this right-wing policy thing as a general learning how societies and their people build up their own narratives. There's too much to learn in one lifetime to not offer guidance to the next generation. No, you offer guidance, but the problem is that most people offer what their opinion is of what it is that the rest of the world needs to do. And that's difficult for then a lot of people to then understand what it is that they're supposed to be doing with their life. Right? See a lot of times, well, you shouldn't take that job, you shouldn't marry this person, you shouldn't, all this other stuff that, basically trying to tell the kids how they should live their life, only wanting the best for them, being able to see, what it is that is the best for them from your own opinion of it. But ultimately, it's their decision that they need to make because they're the ones who have to live their life. They're the ones who are on this planet to figure out their way. And now, as much as we can want them to do like the things that we think are most appropriate and awesome, it's going to be their decision that they have to make. And helping them to understand that making those decisions is on their, like, something that they need to take responsibility for and not leave it up to somebody else. Because you'll be spending your whole life trying to figure out somebody else to try and tell you what decisions you need to make. Where from an early age, if you were ingrained in the idea that I can make decisions for myself, you might very well be able to have the skills to make the most appropriate decisions for yourself, being able to weigh out the options, learn how the consequences work from your decision making. This is not, again, it's not a game. Right? One guy does own it all. I guess so. But the trend is that a few own more and more. Yeah, absolutely. You're absolutely right about that. The inequality is growing. Right? And there's nothing you can really do to change that without suffering and pain and misery on account of it. The reason why is because of the things that we have learned from the Cantillon effect. So understand what it is that is creating the inequality and learn what it is that you can do in order to do the workaround. Figure out more income, learn how to cut your expenses. But there is no way that we can reverse it without the entire populace feeling the pain and misery that would come from it. Now, like, I mean, if it happens, let's go for it, man. Let's own that and do it. But if it's going to be something that we're going to try and fix, I don't think so, right? I don't think there's something that you can fix there. So as everybody else goes to try and fix it, I'll do my part, whatever, as far as the attempt to try and fix it. But I know that ain't going to happen, and that I'm actually going to be doing what it is that I need to do in order to, excel and move on. Because the fix isn't possible. It's not like it's an imaginary, thing that can happen. You can't fix it. It's not fixable. It's a cyclical thing. And so without going through the cycle, it's just like, you can try and slow or speed up the cycle of it, but you're not going to be able to like reverse it or, in any kind of meaningful way to have a return of renaissance back to like the day of a single income providing for the family and stuff like that. Like that's not possible. Not anymore. Not here. Like you can move to another location in the world and maybe have something like that happen, but here in the United States, it'll be very difficult to have that as a generally speaking thing. All right, generational wealth is 100% wisdom of survival. I can tell you why things are not flexible. It is built to have the musical chairs. Even if 100% people succeed, system makes sure 20% of them will fail. Okay. I mean, if that's the way you see it, then, just deal with that, right? Like, if 20% of them are still going to fail, then don't be part of the 20%, like, I look out there, like I have some homeless friends, right? I know some homeless people, and they're good people. Like there's, they're decent. They're polite and awesome, as far as just like, decent people. And there's like, I can see it. There's no way they're gonna have stuff in their life. Like it's not happening for them. I don't know what it is that you can do inside of this society to try and make it so that there's a benefit to these people or something that can be done. I mean, you can alleviate the pain some, but you're not going to stop this. You're not going to stop the ever increasing amounts of inequality. You're not going to slow the rate of poverty. It's not going to happen. All the effort to do it will be enough to alleviate some symptoms. It'll like, kind of feel somewhat like you're contributing and providing effort. There will be people who will thank you for it, but ultimately the problem will continue to grow even worse. And so understanding it for what it is, like this is the problem. This is a problem that is going to happen and it's going to continue on. And as far as dealing with it, you can provide houses, but you can't provide people to be ambitious, to maintain and maintain and keep it clean and all the other stuff. You can't keep people from to do that if they didn't work hard to provide it for themselves. So you can provide them with housing, but you can't provide them with the mental health to make sure that they can continue on with this option that they have been provided to. It's just like, it doesn't work quite like that. Like people wish they could, like they think, well, they don't have a house. Maybe if we gave them a house, right? Well, they don't have a house for a reason, right? And the reason is that they probably grew up in a bad family. They had a horrible, experience with drugs and alcohol that now have deteriorated them. There's all kinds of reasons that are out there, and just providing them with a place to live isn't going to be enough. That's like, it might alleviate the pain again for a few, but it's not going to solve any kind of real problems out there. Most of the problems that are faced out there are literally that of mental health. They're like, they literally do not think correctly. And I'm not saying correctly to the way I think. I'm saying thinking correctly to the way that they can actually maintain their own survival within society, in the things of like, here's an apartment. Be sure and don't trash it. Don't break holes. Don't bust out the windows. Don't do drugs in here. Don't do all that other stuff. But you just took them off the street where they had these mental issues, didn't fix that, and put them in a room. Well, the same experience of being in hell in the streets is still going to be the same experience inside of this apartment, because it's all up in here, right? And so that's like, again, you're not going to be able to fix these things. That this is the problem that people are facing. All right, cruise down here. Okay, another American. I think that it's Congress that makes the tax law. To be honest, too large degree, I don't see them changing too much. All right, and nobody has crystal ball to tell what the 100% successful profession to go into. You don't change it if you say otherwise. You just don't know how things are. That's right. You really don't. Like, I barely graduated high school. I went to work at a lumber yard. I did construction. Right? I dove into economics. I never took a college course on anything, ever, right? I've never taken an online course for anything. I literally just went to the internet and said, what is? And I was able to come up with at least enough understanding to then now communicate some things out there onto the internet that has now got cash flow coming towards me. How in the world did this happen? Like, anybody can go out there and do anything that they want, so long as they stick to it with the mindset that I'm trying to provide value to this world. You provide value to the world, and you're gonna, it's almost as if it's like the natural occurring reward is to be provided for in some way, whether it's with, good experiences, whether it's monetary, I mean, whatever. But you provide something useful to the world doesn't, it's almost like it can't help but to say, hey, okay, cool, thanks for providing the world with usefulness, here's some, abundance that comes back from it, and just live it that way. Most of the time we end up looking at things that on the external that says, this is limiting me. Look at all these limitations that I have. Look at the taxes that I pay. Look at all this. Look at all the, entry barriers. Look at all blah, 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 blah. There's all these things that are, keeping us from being successful. And we can identify each one of them. All that. Okay. Yep. That's all the barriers. I got it. Okay. Give me all them barriers. Right? Put all the barriers, set them right there. Now let's actually do this, because barriers don't really exist except for right here in our own head. I know. Look at my channel, right? I had somebody tell me that one time. They were like, man, you really busted through all the barriers. How did you do that? And I'm like, there's barriers? Like, what are you talking about? And it was just like, well, because you're not a professional, you don't have this, all these barriers. And I'm like, I didn't know I didn't know that would hold me back. I didn't know that, Sorry, I didn't see the barrier. I didn't see the sign. I have trouble reading sometimes, so maybe I didn't even look at it. But I didn't know there was barrier. Sorry. Apparently I broke them. I didn't mean to. I'm sorry. Do I need to pay for anything? Do I need to fix that? I didn't realize I broke barriers. And so there is none. The only barriers that exist are the ones that are in your own head. And that's literally the case for everything out there. I mean, build up 144,000 subscriber YouTube channel based on economics that you have no official reason to even understand. Not an investor, not a banker, not somebody who come from wealth, not a business owner, none of that stuff, right? Why do you have this knowledge, bro? Like, why would you do this? This doesn't make any sense, right? It's because I had a natural curiosity for economics, and I love talking about it out here. And for that, this is what I get. And anybody can do whatever it is they want. You can do it with fishing, you can do it with baseball, you can do it with whatever you want. It doesn't matter what it is. All right, real life finance, $2. It's a game, a serious game of real life Monopoly. That's right. Real life finance, you're absolutely right. Thank you so much for the $2. What time? 11:52. I got 8% left on my phone. All right, guys, we're just going to give it probably another, 5-10 minutes here. Is there anything else we want to cover? I mean, I love doing these live streams. And I love just staying out here, and I could be out here all day, but we do have to eventually call it a day. Homeless get turned into McDonald's. Okay. Paul, that is why in the past, the bankers and politicians create war, so they force society into do or die. I do not create this and do not agree with it. It is, however, what I believe to be real. Yeah. And that's, and that's just the thing. Like, a lot of people were like, oh, dude, you live some easy life out there in, whatever, in the Pacific Northwest. What if you lived in Ukraine? And I'm like, I don't live in Ukraine. I don't live in Ukraine. All right? I don't live in Afghanistan. I don't live in Iraq. I don't live anywhere. I don't live in those places. I live here. This is where I live. What if I had $1 million, right? What if I had $5 million and I didn't earn it or anything like that? Like, what if? That's like, look at your life. Look at where you're at. Don't say, what if I lived in Ukraine? Say, what if I actually went out there today and did something? That's what you should be saying, what if? Like, comparing yourself to other people, no matter how good or bad, doesn't benefit you in any way. The only thing you can do is compare yourself to the past and how well you can go into the future. That's it. That's the only thing you should really look at yourself comparatively wise. What if? I mean, there's a million what ifs out there that you could just play this game all day long. I made it to the top of the ladder praised my own excellence, then realized the rungs I was standing on were other humans' worn out backs. Yeah. No, I've seen people who abused other people to get what they wanted, to get what they to get their desires, to get their, to get their needs met, to get their wealth. I've seen it happen out there. You know what ends up being? Okay, I'm going to end it right here because this is 5% left on my phone here. But this is what it ends up being, is that, and this is a harsh reality for most people, because if you profited from it and you got your success, what ended up being is that the people that you feel that you stepped on and wore out and whatever, if they did not learn their lesson from that, then they are doomed to repeat it from somebody else. Right? Now, I'm not saying that you should go out there and teach those lessons to people, but everybody in our life is a teacher, no matter who they are, right? The good and the bad experiences are all lessons learned, and it was because of our own doing that put us there, right? That put us in front of those people who then have them teaching us those lessons that will be repeated. So if they were abused by you, they're going to get abused by somebody else, and if they were abused by them, they're going to get abused by somebody else beyond that. And I'm not saying you should go out there and teach them the lessons, but those are the lessons they needed to learn so that they don't experience that again, and they don't let other people do that to them. Right? Just the same thing that happens to you and all the people who treated you like hell throughout your entire life, right? Those are lessons that you needed to learn so that you don't get that experience from other people ever again. And it's kind of sad, but it's the reality of it. Uneducated Economist, you guys let me know.